Everyone in this country has heard the same story about Florida real estate. Prices are falling. Insurance costs are destroying affordability. Retirees are leaving. Inventory is piling up. The market is in trouble. And that story is true. The data backs it up. But here is what that story leaves out. While American buyers are retreating from Florida, a group of Japanese corporations has been making the largest coordinated bet on American home building in history. They are not buying vacation homes. They are not speculating on condos. They are buying the actual companies that build the neighborhoods. And Florida is one of the most targeted states on their map. The question this data forces you to ask is a simple one. Who sees something in Florida that the mainstream narrative is missing? And what does it mean for the people who already own homes there? That is what we are going to find out. Welcome to Housing Intel. Drop a comment below and tell us where you are watching from right now. Are you in Florida? Are you somewhere else watching this market from a distance? Your location tells us a lot about what to cover next. And now let us get into the numbers. The first thing you need to understand is the scale of what Japanese firms have already built inside the American housing market. This is not a recent story. It is a decade-long strategy that most Americans have never heard of. And the numbers are striking. According to data from construction analytics firm Zonda, Japanese-owned home builders had roughly 0.2% of the United States single-family home building market in 2015. By 2025, that figure had climbed to approximately 4.7%. And once the most recent round of acquisitions is completed, analysts at ResiClub project the combined market share of the three largest Japanese builders alone will exceed 5.5% nationally. To put that in concrete terms, Japanese corporations now own 33 home builders operating inside the United States. That is not a footnote. That is a structural shift in who controls residential construction in this country. The three companies driving this expansion are Daiwa House, Sekisui House, and Sumitomo Forestry. Each of them is a massive Japanese conglomerate. Each of them has made explicit, publicly stated goals for their American operations. And each of them has been buying United States builders at an accelerating pace since 2017. The second point is about why they are doing this, and the answer reveals something important about what they believe the long-term trajectory of American housing looks like. Japan is in a demographic crisis. The country's population has been shrinking for years. Fewer people means fewer households. Fewer households means less demand for housing, and less demand means that the home building industry in Japan has a structural ceiling on its future growth. These are not small companies looking for a quick trade. They are multi-billion-dollar enterprises with thousands of employees built around the business of constructing homes. They need a market that will keep growing. And they have decided that market is the United States. According to ResiClub analysis, American population growth continues to drive household formation at roughly 1.2 million new households per year. The Sun Belt states, including Florida, Texas, the Carolinas, and Arizona, are absorbing the largest share of that growth. Japanese executives are not guessing about this. Sumitomo Forestry has publicly stated a target of delivering 23,000 homes annually in the United States by 2030. That is a company betting its future on American real estate. There is also a financial advantage that American builders cannot easily replicate. Japan has maintained extremely low domestic interest rates for decades. Japanese corporations can borrow money at a fraction of the cost that American firms pay. That gives them the ability to write larger checks, absorb more risk, and outbid domestic giants like Lennar and D.R. Horton when acquisition targets come to market. Industry insiders quoted in the Wall Street Journal confirmed that Japanese buyers have used that cost of capital advantage repeatedly to win deals that American builders could not match. The third point is about the specific acquisitions and what they mean for the competitive landscape of American home building. The Sekisui deal that shocked the industry came in April of 2024 when Sekisui House acquired MDC Holdings, the parent company of Richmond American Homes, for $4.9 billion. That single transaction vaulted Sekisui House into the top 6 homebuilders in the entire United States. The company now operates in the American market under the name SH Residential Holdings and has assembled a portfolio that spans 16 states, including Florida. Then, in February of 2026, Sumitomo Forestry announced an agreement to acquire Tri Pointe Homes, a publicly traded builder ranked on the Fortune 1000 for $4.5 billion. That deal, once completed, would make Sumitomo the 5th largest homebuilder in the United States. 2 weeks later, Stanley Martin Homes, which has been owned by Daiwa House since 2017, announced the acquisition of United Homes Group for $221 million, extending the Japanese footprint deeper into the Carolinas. 4 major Japanese acquisition announcements in the first 5 weeks of 2026 alone. According to reporting from Resi Club, Japanese firms have announced or closed acquisitions of 23 United States single-family builders since 2020. That is more than double the pace of the prior 7 years combined. If you find this kind of data useful, here is one way you can help us keep delivering it. Hit that super thanks button below this video or consider joining as a Housing Intel channel member. When you support the channel directly, you are helping us keep this research free and independent with no real estate industry money behind it. The data that protects your financial decisions should not be behind a paywall. Your support makes that possible. Now back to the numbers. The 4th point is about Florida and why it became a priority target for Japanese capital even as the broader Florida housing narrative has turned negative. Sumitomo Forestry's subsidiary, DRB Group, made its first major Florida move in 2024 when it acquired Biscayne Homes, a luxury builder with an established presence in the Tampa Bay and Southwest Florida markets. DRB Group had already started operations organically in the Orlando metropolitan area in 2023. The Biscayne Homes acquisition accelerated that Florida strategy by adding a recognized brand in the premium Tampa market. Sumitomo's general manager for North American housing described Florida as one of the last remaining major markets they needed to break into. That is a telling statement. It means the rest of the Sun Belt map was already covered. Florida was the missing piece. Then in March of 2025, Sumitomo consolidated its American operations by merging Brightland Homes into DRB Group, creating a national-scale organization that now adds Jacksonville to its existing Florida footprint, along with Texas, Arizona, Colorado, and Tennessee. The combined organization expected to deliver 9,000 homes in 2025 across 14 states and 19 operating divisions, making it one of the largest privately held builders in the country. Meanwhile, Daiwa House subsidiary Stanley Martin Homes has stated a goal of increasing Florida sales from roughly 300 homes in 2022 to more than 2,000 homes annually by 2030. That is a nearly 7-fold increase in production inside a single state. Sekisui House expanded its Florida presence through the MDC Holdings acquisition, which brought Richmond American Homes and its southeastern operations into the Sekisui portfolio. If you have not subscribed to Housing Intel yet, now is a good time. We publish data-driven real estate analysis every Monday, Wednesday, and Friday. No opinions, no industry spin, just verified numbers. Hit subscribe and you will never miss a report. Now let us get to what this concentration of Japanese capital actually means for Florida home values. The 5th point is about what this concentrated foreign capital actually does to housing markets in Florida, and whether it is good news or complicated news for existing homeowners and buyers. Here is the nuanced read that most coverage misses. Japanese builders are not flipping houses. They are not inflating prices with speculative purchases. They are adding supply. And in a state that currently has a significant inventory surplus, more supply from Well-capitalized builders competing aggressively on price could put further downward pressure on home values in specific submarkets. DRB Group in Tampa, for example, is building luxury and semi-custom homes positioned above the entry-level market. That does not directly compete with a retiree trying to sell a tract home in Pasco County. But in the new construction tier, they are a formidable competitor. And when a Japanese-backed builder with low cost of capital offers aggressive incentives to move inventory, American builders feel that pressure in their pricing. There is also the long-term strategic dimension. Japanese firms are buying for the next decade, not the next quarter. They are not going to stop building if demand slows temporarily. They will offer mortgage buydowns, closing cost assistance, and price adjustments to maintain velocity. That means the pipeline of new homes does not shrink during a slowdown. It keeps producing units. And in markets already saturated with inventory, that sustained supply can weigh on prices for years. The sixth point is about what the data tells us and what it does not tell us about the long-term implications for the Florida housing market. The optimistic interpretation is straightforward. If the three largest Japanese home builders collectively deliver on their stated production targets, American consumers benefit from increased housing supply at a time when the long-term structural shortage remains near 4 million units nationally. Japanese firms have also been credited with bringing efficiency techniques from their domestic operations that can reduce construction waste by as much as 20 to 30%. Lower build costs can eventually translate into more affordable homes. The skeptical interpretation is equally straightforward. Concentration matters. If Japanese firms continue acquiring at this pace and eventually control 8 to 10% of American single-family construction, the competitive dynamics of the industry change. The pricing power and capital advantages these companies carry can be used to crowd out smaller regional builders who cannot match their terms. Fewer competing builders over time can mean less diversity in housing product and less pressure to innovate on affordability. For Florida specifically, the most immediate implication is this: the state is not going to see a reduction in new construction pressure. The firms building in Tampa, Orlando, and Jacksonville are backed by Japanese conglomerates with explicit growth targets, access to cheap capital, and a long-term time horizon. They are not going to slow down because mortgage rates stayed elevated for another year. What this tells existing Florida homeowners is that the resale market will continue to compete against a well-funded new construction pipeline for the foreseeable future. That dynamic does not resolve quickly. It resolves over years. And in markets where inventory is already elevated, that sustained competition from new construction is a headwind the data says is not going away. Here is the bottom line. The story about Florida real estate in 2026 is more complicated than either the bulls or the bears are telling you. Yes, the market has stress. Insurance costs are real. HOA impairment is real. Condo market pressure is real. But the data also shows that some of the most sophisticated, longest horizon capital in global real estate has made an explicit decision that Florida is a market worth owning. That does not make the problems disappear. But it does tell you something important about how patient, data-driven investors view the state's long-term fundamentals when they strip away the noise. The people who get hurt in a market shift are always the ones working with incomplete information. You now have a piece of the picture that most Florida homeowners have never seen. And that is exactly what Housing Intel is here to provide. Housing Intel publishes 3 reports every week: Monday, Wednesday, and Friday. Every one of them is built on verified data, not speculation, not opinion, not real estate industry talking points. Subscribe if you want the full picture, and share this video if someone you care about needs to hear it. We will be back with more.